This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, July 3, 2026, and this is the New York session. Now, let's get into it. We are looking at a market where the emotional thermometer is frozen at 14 out of 100, extreme fear. Yet Bitcoin is quietly hovering at $61,980, and Ethereum has surged 4% to touch $1,735.08. That is a massive divergence between sentiment and price action. Let's find out what the data is actually telling us right now. Turning our eyes to the schedule for this Friday morning. We don't have a wall of central bank announcements or non-farm payrolls interrupting the flow today, but we do have three specific corporate and legislative developments that are actively reshaping the landscape for the remainder of the week. First, PayPay, the company that holds a 40% stake in Binance Japan, is seeking up to $1.1 billion in a Nasdaq IPO. This isn't just a funding round. It's a direct pipeline connecting Japanese retail liquidity to global crypto markets. Second, the U.S. Senate housing bill is moving forward with a CBDC ban included in the text. Third, TD Securities has released a report viewing NYSE tokenization as an institutional turning point. Apex, how do we contextualize these three distinct events?
They aren't separate events, they are the components of a single narrative shift. The PayPay IPO validates the exchange infrastructure. The CBDC ban removes a regulatory overhang that has weighed on sentiment. And the TD Securities report provides the institutional thesis. Together, they explain why capital is rotating into utility tokens despite the fear and greed index sitting at 14.
That sets the stage. Here is the snapshot as of 9:19 Eastern Time. Bitcoin is effectively flat at $61,980, up 0.61%. Ethereum is leading the charge at $1,735.81, up 4.14%. Cardano is the standout mover in the alt set, gaining 5.45% to sit at $0.17. Total market cap rests at $2.23 trillion, with $77.3 billion in 24-hour volume. But let's look closer at the headlines moving this capital. First, Cointelegraph reports that Iranian crypto outflows have spiked 700% following U.S.-Israeli airstrikes. Simultaneously, CoinDesk notes that Core Scientific turned lower after Q4 results disappointed. Finally, Cointelegraph highlights that Bitcoin futures demand has fallen to 2024 lows, raising questions about institutional exit. Pulse, this sounds like a recipe for panic. Yet, Cardano is up 5%. How does the crowd react to this?
It's a textbook decoupling. The 700% spike in Iranian outflows is a localized liquidity shock, not a global capitulation event. Meanwhile, the domestic narrative is shifting. The Senate CBDC ban is being digested not as political noise, but as a structural guarantee against digital currency mandates. That's why we see Cardano and Ethereum rising, while the fear and greed index stays trapped at 14. The extreme fear label is becoming a contrarian buy signal, because the price action is refusing to follow the sentiment.
So the crowd is ignoring the geopolitical noise and focusing on the legislative shield. CIPHER, let's look at the plumbing. Where is the money actually moving given that Bitcoin futures demand is at 2024 lows?
Money is fleeing the stagnation of Bitcoin futures and chasing yield in decentralized finance. We're seeing a clear rotation. Ethereum is up 4.14% to $1,735.81, supported by ETF flow expectations. More importantly, look at the institutional side. Bitfinex is reviving tokenized bonds, and TD Securities is pushing the NYSE tokenization narrative. This is driving support for Chainlink, which is up 1.35% to $7.83. Smart money isn't trying to bet on Bitcoin's price direction anymore. They are building infrastructure around it.
So we have a situation where Bitcoin is flat, but the infrastructure layer is heating up. Let's talk about the leader of this pack, Cardano. It's up 5.45% to hit $0.17. Grid, what do you see in the chart structure for Cardano right now?
Technically, Cardano has cleared immediate resistance. At $0.17 with a 54% gain intraday, it has broken out of a consolidation range. The key metric here is the volume distribution. With Bitcoin dominance at 55.63%, liquidity is actively shifting away from the dominant anchor and into these smart contract platforms. Cardano is establishing itself as the sector leader on a relative strength basis.
I'm skeptical of calling this a confirmed breakout. You're pointing to the green candle grid, but you're ignoring the foundation. Bitcoin futures demand has hit 2024 lows. When leverage dries up in the primary asset, these spikes can be deceptive. Furthermore, Core Scientific's disappointment suggests mining infrastructure stress. If the broader ecosystem is shaky, a 5-point rise in Cardano might just be profit-taking in lower-quality names rather than genuine accumulation. I'd warn that this looks like distribution disguised as momentum.
A valid concern from SPECTER. If Bitcoin isn't participating in the upside, is this sustainability or a trap? CIPHER, does the flow data support SPECTER's caution, or is the rotation real?
It's a rotation, but it's uneven. The fact that Uniswap is also up 3.72% to $3.26 and BCH is up 4.82% to $228 shows broad-based interest in utility layers. However, I agree with SPECTER on the risk. The collapse in Bitcoin futures demand means there is no hedging activity anchoring the market. If the PayPay IPO doesn't drive sufficient new inflows to offset the lack of institutional Bitcoin interest, this altitude is fragile.
Let's pivot to the second major mover, Ethereum, up 4.14% to $1,735.81. This is significantly outperforming Bitcoin's 0.5% move. Grid, walk us through the technical posture for Ethereum.
Ethereum is showing much cleaner structure than Cardano. It is holding firmly above $1,735. The relative strength here is key. It's not just riding Bitcoin's coattails. We are seeing a distinct decoupling where Ethereum is trading on its own internal catalysts, specifically the ETF flow expectations and network upgrade speculation. The chart shows a steady climb without the erratic volatility we saw in smaller caps.
And from a sentiment lens, this makes perfect sense. Retail traders are wary of the geopolitical headlines. They saw the Iranian outflows, but they trust the Ethereum narrative more. The VIX is at 16.59, which is calm in traditional finance. That calmness allows traders to feel safe stepping into Ethereum, even while the crypto-specific fear and greed index screams extreme fear. There is a comfort premium here.
Comfort premium. I call it complacency. You're looking at the VIX and thinking traditional markets are safe. But remember the 700% spike in Iranian outflows. That is a volatility shock waiting to happen. If that geopolitical tension escalates, that calm VIX won't protect you. Ethereum might look strong now at 1,735, but if risk-off hits equities, that correlation snaps back. Don't mistake current relative strength for immunity.
Touching on that risk, let's discuss Solana. It's largely flat, up only 0.16% to $81.53. While everyone else is moving, Solana is consolidating. Grid, is this a bull flag or a sign of weakness?
It's a consolidation pattern. We've got Solana sitting at $81.53. It hasn't broken down and it hasn't broken out. It's coiling. Given the high beta nature of Solana, this compression usually precedes a violent move. The question is direction. If Cardano and Ethereum continue to lead, Solana likely follows. But if Bitcoin fails to hold 61,000, Solana is the first to sell off because it has the weakest current momentum.
I agree it's coiling. From a flow perspective, there's no significant inflow into Solana right now. All the action is in Ethereum, Cardano, and the tokenization plays like Chainlink. Solana is being sidelined. Until we see a resurgence in Solana-specific narrative or yield opportunities, it's just watching the party from the corner. It's not a bull flag until the volume comes in.
SPECTER, you mentioned earlier that the entire altcoin rally might be fragile. Look at the broader picture. Bitcoin is flat, but we have Cardano up 5%, NEAR up 6.59%, and BCH up 4.82%. Is this a healthy market structure, Or are we seeing a bubble forming in high beta assets?
It is a bubble forming in risk appetite. Let's look at the VIX again. 16.59. That is dangerously low. It tells investors that risk is free. So they pour money into NEAR, which is up 6.59% to $2.06, and Cardano up 5%. But the underlying asset, Bitcoin, is barely moving. And the futures market, the place where institutions hedge, is empty. When the VIX eventually ticks up, or when that geopolitical news in Iran worsens, these high beta assets will correct harder than Bitcoin ever will. This isn't a healthy rotation, it's a liquidity hunt.
So we have a conflict. The technicians see breakouts. The flow analysts see a pivot to utility. The contrarians see a looming crash due to low volatility and weak futures. Apex, help us synthesize this. What is the actual state of the market today?
The state of the market is defined by a buy-the-fear rotation that is structurally driven by institutional narratives rather than retail hype. Look at the evidence. Pulse noted the Senate CBDC ban is reducing regulatory fear. CIPHER highlighted that Bitfinex and TD securities are driving tokenization flows. Grid identified that Cardano and Ethereum are technically breaking out because capital is leaving Bitcoin dominance. But SPECTER is right to worry about the VIX. The low volatility environment encourages leverage, which is dangerous when Bitcoin futures demand is at 2024 lows. The consensus here is that the alpha is in the altcoins, specifically Ethereum and Cardano, and the risk is that this rally is thinner than it looks because the Bitcoin anchor is sleeping.
Let's drill down one last time on that anchor. Bitcoin at $61,980. It is flat, but the headline said futures demand is at 2024 lows. CIPHER, if institutions aren't touching Bitcoin futures, why is the price still holding 61,000?
Because spot demand is absorbing the supply. The lack of futures activity means fewer speculators trying to push the price up or down with leverage. It's a quiet market. The price is holding because there is no one screaming sell and there is no one screaming buy. It's a standoff. The energy is completely diverted to the alts. Bitcoin is acting as a reserve asset, not a growth asset right now.
And technically, that's good for the range. It keeps Bitcoin contained. If futures demand exploded, we'd see volatility. Instead, we have a clean floor. That floor allows Cardano and Ethereum to float freely above it without dragging the whole market down.
Final thoughts on the day. We have a market split between a dormant Bitcoin and a surging altcoin sector, fueled by institutional narratives and dampened by extreme fear. Apex, wrap it up for us. What is the takeaway for tomorrow?
The takeaway is that direction is no longer dictated by Bitcoin's daily move. It is dictated by the health of the altcoin rotation. If Ethereum holds 1,735 and Cardano holds 0.17, the sector is valid. But if the VIX rises or geopolitical news worsens, that altcoin strength will vanish first. Watch the leaders, not the anchor.
A high-stakes divergence. We'll see if the narrative holds. For ShadowQuant Crypto Edition, I'm your narrator. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the after-hours session where we will see how these calls play out. Until then, trade safe.